Milan. We'll be doing question 3, which is the cash flow statement. It's from the same paper, IEB November 2022. Information relates to Jessica Jewels Limited, which is a private company. So Jessica Jewels is a South African listed company with an authorized share capital of 5 million shares. They source and sell both precious and semi-precious stone jewelry to the retail market. As they rent the existing premises, their fixed assets are primarily made up of a delivery vehicle and insurance-approved safes. Extract from the statement of financial position, i.e. the balance sheet, and they gave us everything there. Okay. Here I'll have to check what the question says before I can even consider anything. All I know for now is that we are in 2022. So our financial year end is the 28th of February 2022. It began on the 1st of March 2021. Then we're given the statement of profit or loss or comprehensive income, i.e. the income statement for the year ended 28th of February 2022, revealed that the net profit after taxation was 5,915,000. The company tax rate is 30%. Then they gave us our fixed assets. During the year, the company sold old equipment at its book value of 150,000. So because we sold it at book value, that 150,000 will be cash outflow. And it falls under investing activity. Just to go back to that profit, we need profit before taxation to prepare note number 1, which is reconciliation between profit before tax and changes in working capital. When it comes to fixed assets, we are going to use it more when we get to investing activities. It's either we focus on the sale disposal, which results in a cash inflow. There you only look at the selling price, okay? Selling price will be the inflow. We don't care about profits or the carrying value here. No, the only thing we care about is how much did we sell that asset for. A new delivery vehicle was purchased during the year for 300,000. Now that tells us there's a cash outflow under investing activities, okay? Then we've got loans and interest. That also falls under financing activities. Interest, we will need that in note number 1. We are going to add it back. And that is solely because interest is shown separately on the face of your cash flow statement. Please check out the playlist, written cash flow statement. That's why I explained everything when it comes to all elements that go to the cash flow statement. Then they said an additional loan of 2 million was taken out in the second half of the year. So that is a cash inflow under investing activities. We are going to write it as cash inflow from loan or proceeds from loan. The total repayments for the loan as well as the interest amounted to 22,625,000 for the year. And that includes interest. We'll have to actually take that minus interest we paid, and the capital portion will fall under repayments of the loan under financing activities. And then we've got movement of stock resulted in a generation of cash of 8 million. That will go to note number 1 as a cash inflow, which means that our trading stock actually decreased from last year. It decreased by 80 million. Right, I don't know how much it is this year. And then investments that will fall under investing activities. So we bought 4,000 shares in the new startup company, Temi Limited. Temi Limited did not declare or pay any dividends during the year. So that will result in a cash outflow. I'd have to look at that. For shares, that is financing activities, we sold 800,000 shares. We only care about that 6,720,000. That will be cash inflow. In January 2022, excuse me, the company bought back 150,000 shares at 8 rand. That's all we care about. Here we don't care about loss due to buyback or average price per share. We only care about what we paid for those shares, which will be 150,000 times 8 Rand 70, which is a cash outflow under financing activities. Then we've got dividends. All outstanding dividends for the previous year were paid before the interim dividends was declared and paid during the year. Now, that means everything that we owed shareholders at the beginning of the year was paid. I'm going to start. I'm going to start with note number 1, where I need to complete the reconciliation between profit before taxation and cash generated from operations. I'll start with net profit before tax. Now, with net profit before tax, I will take the net profit amount that I was given, which is after tax. The fact that it is after tax, it means that 5,915,000 is at 70%, and I want before tax, which is 100%. Before tax will be 100%, and after tax will be at the rate excluding tax, which is 100 minus whatever we have as a tax rate. In this example, it'll be 100 minus 30%. So profit after tax is 70. So that 5,915, it is at 70%. We need the 100%. How do we get the 100%? You multiply by what you want, you divide by what you have or what you're given. And that is why we will multiply this by 100 divided by 70. It'll give us 8,450. When it comes to depreciation, depreciation, we need to add it back because it's a non-cash item. I'm going to go to what I've been given, which is the statement of financial position. I am given fixed assets at the beginning of the year. They amounted to 1,550,000. At the end of the year, they amounted to 1,467,500. And all of that is at carrying value. That's what matters. Otherwise, they'll just have to check what they see under fixed assets. We sold an old equipment at its book value, which is 150, a new delivery vehicle purchased during the year for 300,000. That, all this information, I am going to need it when I calculate my depreciation. So to calculate my depreciation, I'll have to do this working here. I will start with carrying value at the beginning of the year, which amounted to 1,550,000. Disposals at carrying value amounted to 150,000. That will be in brackets. This is just a summary of your tangible asset note, by the way. And we are going to add additions at cost. The cost price of the asset purchased was 300,000. So I am going to add that because it increases our asset, which is vehicle here. Then I'm going to subtract depreciation. And once I've subtracted depreciation, I should have the carrying value at the end of the year, which was given to you. And that was 1,467,500. Manipulate the formula to calculate X, and this is what you will have. You add what you subtracted. You add what you subtracted, you subtract what you added. So you'll take 1,467,500 minus 300,000 plus 150,000 minus 1,550,000. Our X will be 232,500, and that 232,500 will be included in note number 1 as depreciation, and we are going to add it back. We show it without brackets. Let's go to interest. For interest expense, I will look at loan, which comes from Bali Bank at 9% per annum. At the beginning of the year, the loan was 12 million. At the end of the year, it is 12,500,000. Let's read the additional information to check what we can get from there. We've got loans and interest on the loan is capitalized, which makes it easy for us. Please do check out videos on cash flow statement. I explained that right thoroughly. We've got an additional loan of 2 million, so we are going to add that to opening stock. And the total repayments for the loan as well as the interest amounted to 2,625,000. And that also will be included in brackets because we are making that payment. It's a table that you already know, by the way. I'm going to start with the opening balance, and the opening balance was 12 million. You will add proceeds, which amounted to 2 million, and subtract the repayments, which amounted to 2,625,000, but you show that in brackets. So the only thing missing is interest, which should increase the loan amount, but our balance at the end of the year amounted to 12,500,000. Work backwards. So you will take 12,500,000 plus 2,625,000 minus 2 million minus 12 million. That will give you interest expense amounting to 1,125,000. That 1,125,000 is interest expense. We are going to add it back for us to get your profit before changes in working capital. So how did I get that? I took 8,450,000. I added 332,500, and I added 1,125,000. Once I've added all of those, it gave me 9,807,500. Okay, now let's look at inventory. We need to check the increase or decrease from inventory. From the information I was given, I don't remember seeing inventory here. I'm gonna go straight to additional information and check anything that talks about inventory. In this slide, there's nothing. Well, the issue is 2.4. 2.4, there it is. The movement of stock resulted in a generation of cash of 8 million. That's a cash inflow from inventory. The only way you can have cash inflow from inventory is when there was a decrease of your inventory. So the decrease of inventory indicates that you sold inventory. That's why it has decreased. I'm going to erase increase and circle the decrease because that's what we need, and the amount will be 8 million. Trade and other receivables. For trade and other receivables, normally what goes to trade and other receivables are things like your accrued income, prepaid expense, and all of that. And I don't see any of that here. Even sales income tax, there's no debit. But even if there was a debit for sales income tax, I would not include it in trade and other receivables. So the only thing I've got for trade and other receivables is this, which is your debtors control. This year it amounts to 8,520,000. Last year it amounted to 7,320,000. So there was a reduction in trade and other receivable. The reduction in trade and other receivable is good for us as it indicates that it decreased. This is an increase. I bet. Okay. A decrease will be good as it indicates that whoever owes us is paying us. An increase is bad as it means that we bought stock or we gave someone something and they did not pay us. So we lost cash because they didn't pay us. That is why for trade and other receivables, I am going to have a decrease, and a decrease in trade and other receivables results in a cash outflow. An increase results in a cash outflow, and that increase will be put in brackets. You will just take that 8,520,000 minus 7,320,000, and that will give you a cash outflow amounting to 1.2 million. Let's go back. We need changes in working capital. Changes in working capital, and now we're looking at trade creditors. For trade creditors, I will focus on the following. I will focus on trade creditors. Trade creditors amount to 12,900,000 this year. Last year it was 14,600,000. It's bad because a reduction in trade and other payables indicates that we paid our creditors. Cash-wise, it's bad. And then we've got sales pay as you earn a UIF. I have to ignore sales income tax as that must be shown separately on the face of your cash flow statement. And the last one will be income received in advance. Again, I'm going to ignore shareholders for dividends as that must also be shown separately on the face of the cash flow statement. Now, to show that as workings, I am going to write the 2 years, which is 2021 and 2022. Creditors control amounted to 14,600,000 in 2021. This year it amounts to 12,900,000. This so far indicates that there was a cash outflow due to us paying back our creditors. And then we've got sales, pay as you earn, and UIF. I'm simply going to add those to each year. And then we have income received in advance. I'm going to add that to each year as well. And this, the totals will be, for last year, it will be 40,970,000. For this year, it is 13,440,000. This has decreased. A decrease, as I've said, it indicates a cash outflow, which amounts to 1,520,000. 530,000. That 1,530,000, I'm going to put it on the face of the cash flow statement, and that will be a decrease. That's why I'm going to circle the decrease. A decrease in payables. Well, it's good, but for now it's not good, as it means that we paid and the payment amounted to 1,320,000. Now take 8 million, add it with 1.2 million. No, it's 8 million minus 1.2 million minus 1,520,000. It will give you changes in working capital amounting to 5,270,000. Okay. Now they wanted us to complete the extract of the cash flow statement for the year ended 28th February 2022. We just focus on investing activities. For investing activities, we will focus only on tangible assets as well as any investments in fixed deposit or any other investments. It can be us buying shares in another company. Please know that when we buy shares from another company, it's an investment to us. Don't confuse this to the issue of shares. Here we are buying. Okay, we are buying shares. We're not buying back what we sold. We are buying shares in another company. So the company that we are buying shares from, it becomes our investment. That's why we record the buying or the purchasing of shares as, in this case, we are going to put it under investing activities. Okay. Now, as I've said last time, when you look at us investing at in other companies, which is Bank. Last year, we only invested 300,000. This year, we invested 520,000. Please note that when you invest in a fixed deposit or you buy shares from another company, you're taking that money from your own bank account, from the business bank account. So the increase in investment will be shown as a cash outflow under investing activities. It will be a cash outflow, as it means money must go out of the bank account into that particular investment. In this example, that investment will be investment into Tammy. All right. 3 marks for that. Now we're going to look at tangible assets. For tangible assets, because we did the note already, we already know what is happening there. So we don't even need to prepare working. So what we know is that under tangible assets, we have proceeds from the sale of tangible asset, which was given to us. We are showing it without brackets because proceeds means we sold those tangible assets. And then purchase of tangible assets will reduce our bank. That's why we show it in brackets. Negative 220,000 plus 150,000 minus 300,000 will give us 370,000. The next question wants us to calculate the weighted average share price at the time of the purchase of the repurchase of the shares. And this is how we calculate. I normally call it APPS, which stands for average price per share. So average price per share, you look at the value of shares or share capital, ordinary share capital, just before the buyback, and you also look at the number of shares issued just before the buyback. And when you look at the information we are given, at the beginning of the year, our share capital was 30 million. And that 30 million, we issued 4 million to get that 30 million. So in the numerator, I'll have the rand value, which is 30 million. In the denominator, I'll have the number of shares that were issued to make that 30 million, which was 4 million. Please note that we issued shares, right? And when we issued shares, we issued them, well, it didn't give us the share price, but we know that our share capital was 6,720,000, and the corresponding number of shares that goes with that share capital was 800,000. Put this into a calculator. It will give you that is 6,720 in the numerator, and in the denominator, it'll give you 4,800,000. And our average price per share will be 7 rand 65 cents. Be good? The next one is retained income. The balance of retained income, obviously this is a minus plus. It increases on the credit side if we are making profits. But for high school, you won't have losses, so you only have profits. Adversity, it's a different story. Okay. We'll have the balance on the credit side, which is 1,650,000. Okay. And obviously on the credit side of retained income. That's why I said this was a little bit confusing, because they were not specific as to do they want the retained income as a whole. But now when you read the question, they just want retained income after taxation and dividends. They didn't say anything about the buyback of shares. But I will just put in the loss due to buyback on the debit side of retained income. Again, it's very subjective, because that amount, you will normally put it under, well, you actually put it here, because tax and dividends will go to appropriation account. But here's the thing. For me to prepare the appropriation account, I need this year's profits, which we do have. It was given to us. It was 5,915,000, if I'm not mistaken. But now we are lacking dividends. Okay, because tax was already deducted, because they said it's profit after tax. We are just missing dividends. So for me to figure out how much dividends were, I constructed a whole retained income. We started with the opening balance of 1,650,000, and then I added the net profit after tax. Remember, it's after tax that goes to retained income, which will be 5,915,000. And then I subtracted loss due to buyback, which is 1 rand 50 times 150,000, and then subtract your dividends on ordinary shares, which I don't have. So I'll write it as X. But I do have my retained income at the end of the year, which is 3,402,500. Then you just have to apply your mathematical skills here, okay? The first three, I'll just put them into a calculator, and they will give me 7,407,500. Transport that 7,407,500 to the right-hand side. It will be negative, so you will have 3,402,500 minus 7,407,500, and that'll give you 4,005,000. Now I'll just divide by negative to get my dividends. So this is interim dividends plus final dividends. I'm going to take my dividends on ordinary shares and subtract them from my profits, okay, for me to get appropriation. So my appropriation for this example, my appropriation for this example will be 1,910,000. Then you're going to say 1,910,000 plus 1,650,000. It'll give you 3,560,000, which was initially my answer. Okay, because they just said profits remaining after retained income and taxation. They didn't say anything about the buyback. Okay. However, here they subtracted the buyback loss due to buyback, which is 157,500. That's why I'm saying this question we're a little bit confused as to what they wanted. Okay. And that will represent that 3,402,500. It represents the balance of unused profits. You see, if they just said unused profits, then what they did here was superb, 100% correct. But now they said only after taxation and dividends, which was a little bit tricky. Okay. And then we've got this last question here where they want us to calculate dividends paid. I've just calculated dividends on ordinary shares. I've got this year's final dividends. This year's final dividends were that 2,325,000. I've got total dividends for this year. So when you take total dividends for this year minus interim dividends for this, minus final dividends for this year, you'll get your interim dividends. And once you get your interim dividends, dividends paid will be your interim dividends for this year plus last year's final. And last year's final was also given to you. Last year's final was 1,800,000, which is your shareholders for dividends for last year. So that will give us dividends paid. All right. So my dividends paid will be the sum of the two, which will be 3,480,000. Or you can use the node method where you take the balance of your dividends at the beginning of the year. It must be paid this year because these are final dividends for last year. And final dividends for last year are recorded in trade and other payables, which represents everything that the entity owes to the other party, and the entity has not paid, but it has 12 months to pay it because this was for last year. This year we need to pay it, okay? Because current assets last for, current liabilities only last for 12 months. It means we paid it since we are right at the end of the financial year. And then you subtract your interim for this year plus final for this year. But final for this year, the fact that it's final and it's found in trade and other payables, it's a liability that has not been paid. It'll only be paid next year. For this year, we are going to add it back since we already subtracted it from dividends on ordinary shares. And that will give us dividends paid amounting to 3,480,000. See? Thank you guys. If you watched my videos on the cash flow statement, you should have found this very, very easy. Thank you for watching. Thanks, Pretoria again. And thank you, Cape Town. Thank you, Joburg. Thank you, Soweto. Thank you, Devon. Devon is slowly approaching. Ngiyabonga. Ngiyabulele Kapa. Thank you. Ashi, Pretoria. Thank you for watching. What's up?